Get ready for a market minute that will keep you on the edge of your seat. The Fed's upcoming moves are set to shake things up. We're predicting a 25 basis point cut in the federal funds policy rate, bringing it to a range of 4% to 4.25%. But here's the kicker. The Fed's dot plot suggests 2 more cuts of the same magnitude, one in October and another in December. This could have a significant impact on the economy, and it's got everyone talking. During the Federal Open Market Committee's meeting on September 17th, all eyes will be on Fed Chair Jerome Powell's press conference. Expect questions about the Fed's independence, stagflation, and its dual mandate to promote maximum sustainable employment and price stability. The tension between these goals is evident in the latest economic data. Since the FOMC's last meeting in July, there's been a notable slowdown in job creation. The 3-month average now stands at 29,000 jobs per month, a far cry from the 150,000 jobs we saw back then. This softer pace of employment growth has shifted some Fed officials' focus to the labor market, leading to the anticipated rate cut. But here's where it gets controversial. Inflation is on the rise. Inflation measures like the Consumer Price Index and Personal Consumption Expenditures Index are creeping towards 3%. All major inflation metrics are expected to surpass this level soon, prompting the Fed to retain its cautious phrasing of inflation as somewhat elevated. The policy statement is set to undergo a significant change regarding the employment outlook. The committee is likely to remove the phrase, "the labor market remains solid," and replace it with a more cautious tone, acknowledging a softening labor market. The median dot plot predicts 3 25 basis point rate cuts this year and another 75 basis points next year. This would bring the FOMC's interest rate projection down to 3.125%, aligning with the central bank's estimate of the long-run neutral interest rate, known as R*, of 3%. And this is the part most people miss. The Fed's moves are a delicate balancing act. While cutting rates can stimulate the economy, it also risks fueling inflation. The Fed's challenge is to navigate this tightrope without causing a recession or exacerbating inflationary pressures. Join Joe Brusuelas, the chief economist to the middle market, for his daily market-minute economic commentary. Subscribe now to stay ahead of the curve. Joseph Brusuelas, an award-winning economist with over 20 years of experience, is a leading voice advocating for mid-sized companies. He regularly briefs Congress and senior officials on the impacts of federal policy and the factors influencing middle-market executives' decisions. Don't miss out on this crucial market insight. Stay tuned, and feel free to share your thoughts and predictions in the comments. The floor is open for discussion.